Impossible.
Hi, everyone, and welcome to Navigating Geopolitical Shifts, Strategies for Ports in an Uncertain World, presented by the Journal of Commerce by S&P Global. We'd like to thank AD Ports Group for partnering with us on this webcast. I'm Alessandra Barrett, Associate Director of Special Projects for the Journal of Commerce, and today I'm speaking with Ross Thompson, AD Ports Group's Chief Strategy and Growth Officer, and Julian Skirm, the organization's Vice President of Commercial for its port cluster. For those that might not yet be familiar, AD Ports Group today serves as one of the world's premier facilitators of logistics industry and trade, as well as a bridge linking Abu Dhabi to the world. Listed on the Abu Dhabi Securities Exchange as AD Ports, the group operates several clusters covering ports, economic cities and free zones, maritime and shipping, logistics, and digital. Its portfolio comprises 30-plus ports and terminals and more than 550 square kilometers of economic zones within the KeyZad Group, the largest integrated trade, logistics, and industrial business grouping in the Middle East. But before we begin, I'd like to direct your attention to a few housekeeping items. Everything you need to navigate the webcast can be found at the bottom of the console via the widgets listed. Click any of these to find directions for submitting questions, very important, and downloading speaker bios or any additional info. You can also adjust the view to see what it is that you really want to be seeing and really focus it. I do want to ask everyone to take time as you're listening to the presentation to go to that speaker box. That question Q&A box. We want to hear your questions. We've saved time at the end to take some audience questions. So just open that up, type in your question, and click the submit button. Today's webcast also aligns with a forthcoming white paper that's being produced by the Journal of Commerce in partnership with AD Ports. Following this webcast, all attendees will receive a link to that white paper. And next week, this is part 1, we have part 2 of this webcast series. So I encourage everyone to register for that if you haven't already. That's it for the housekeeping. Now let's just dive into the discussion. Ross, I'm going to start with you. I'd like to get a broad look at the landscape. When it comes to the impact of geopolitics on port operations, what trends are you noting?
Firstly, welcome to everyone, and thanks for having me. Look, the first thing I would mention about the landscape as it is today is, geopolitical aspects have always been there, and it's been part of trade for many hundreds of years. We've always lived in an environment where trade tariffs have been prevalent, where trade wars have been affected, where parts of the world are in conflict, where government policy and external government policy changes. And that's part of the operating environment that our sector regularly finds itself navigating. I think the way that we look at it, or particularly myself, is that our job is how do you best position your company and how do you best position your assets to deal with those fluctuations and those changes. What tends to happen in times of such as today, where we have the Russia-Ukraine conflict, we have the potential decoupling of China and the USA. What tends to happen is that tends to change trade patterns, and trade patterns can change very, very quickly. And therefore, as a business, you have to be adaptable to the environment that we operate in. We have to look ahead. We have to spot these changes coming, and we have to position our business in order to be able to deal with those things. But my overriding message is they're nothing new. They've always existed. And I think that our sector, particularly the trade, the ports, the logistics sector, is very, very versed at operating in these types of environments and can adapt the business as we go.
What's your most important, your top piece of advice on how ports can proactively plan for these changes?
I'm not sure you can always plan in advance. I think being agile and spotting the trends early and deciding to deal with those trends fast. I think those that do very well are those that position their business in an efficient and a quick manner. I think the other thing that you always have to have is you always have to have diversity in your business, particularly in ports. They need to cover more than one trade route. It's very difficult if you're a niche operator that's very specific to, very dominated by certain trades, and something comes along that, whether it be geopolitical, whether it be operational issues, something comes along to disrupt that, then you face much more challenges. So you have to be able to have a diverse number of trade routes, a diverse number of trading partners, multiple product sectors, because trade often, tariffs or geopolitical issues, they tend to affect some trades more than they do others, and some products more than others. If you have that diversity and that spread in your business, what you tend to find, what is negatively effective is largely offset by things that are positively effective. And I think one of the things I would say is, in our sector, the geopolitical landscape often throws up opportunity rather than challenges. And what I mean by that is it throws up a number of opportunities to take advantage of new trade routes that will open up as trade finds a new route around these issues. But the customers, the manufacturers, and also the consumers, they still demand product, and they have challenges to overcome. So companies that can work with these companies and overcome challenges, and that have broad asset bases and are agile enough, often gain market share in these times. And that's what I would leave, that these things present not just challenges to overcome, but often they present a lot of opportunities for growth, a lot of opportunity for interaction with your customer base, and a lot of interaction with the market that ultimately leads to an increase in business.
Julian, from your perspective, how has the port sector evolved to address these risks? So trade disruptions, geopolitical shifts, and of course, the pandemic.
Once again, also for myself, thank you very much for inviting me here today. Well, it's quite simple, really. The port's evolution was more linear in pre-COVID period, but you look at the pandemic, brought the paradigm shift with ultimately a lengthy recovery period. And during that, also during the recovery for the pandemic, you also had the recent conflicts, which Ross obviously covered to some extent. But coupled with the current uncertainty in global trade, that's largely due to the rising risk of cost of living caused by inflation, and the increased risk of global recession and or political unrest, the port sector ultimately must evolve to ensure continued smooth flow of goods. And it's obviously essential to maintain a crucial role in global trade. Obviously, digitalization from our side and automation play an extremely vital role in the efficiency of logistics processes in the ports, and it's something that we hold dear within the AD Ports Group. And as I'm sure we'll talk about a little bit later, MACTA is an essential pillar of the current group. But we see in 2023, the digitalization of ports has mainly focused on areas such as artificial intelligence, use of drones, digital twins, and data analytics. Later in the discussion today, Alessandra, I will talk a little bit about how that's impacted our current workday. Ports work with stakeholders to improve supply chain resilience by diversifying sourcing and transportation options. Once again, Ross actually expanded on that. It's absolutely essential that we evolve beyond the traditional port operator. Within AD Ports Group, we like to look at the diversified portfolio, and that's not just traditionally container, it's general cargo and other more important commodities that move through our facilities. Obviously, developing a robust contingency plan is one of the key ways to address disruptions in our industry. These plans involve rapid responsive strategies, stockpiling essential supplies, and we have an excellent example of this that happened during COVID. As a direct result of that, we work very closely with the Food Security Program, whereby, along with other government entities, we are establishing grain bunkers and or silos within our infrastructure to safeguard against potential future interruptions in trade. And something that touches everybody is food safety.
True. Now, can we look a little bit at AD Ports specifically? How would you say that this evolution, what does it look like on the ground for you? How's this impacted your expansion strategy and the daily operations of the port?
Well, if you look at the growth curve of the 80 ports growth, is actually phenomenal. Double-digit growth, more importantly, across all the sectors. And if you just look at 2022 alone, we have major acquisitions that are playing a key role in our growth story. The company completed its first international acquisition in September of last year, acquiring a 70% stake in Egypt's Transmar and TCI. That was closely followed with a vital agreement to acquire an 8% stake in Global Feeder Shipping. And if you look at our investment, particularly in GFS, that was not just increasing capacity, it was ensuring we expanding our fleet and, more importantly, connectivity, not just for the ports cluster, but the entire group. And then we fast forward until 2023 in July, we completed the acquisition of Noatim, the Spanish local logistics giant. Now that's important because it's not only covering terminals, but maritime and in fact logistics. And if you then look at that and the recent interruptions to trade, these are some of the key developments and expansions that will take us to that next level, which is going from a local, locally known terminal operator to an internationally recognized major player. And coupled with this, during this period, we also carefully restructured our company into empowered business clusters that work together jointly to our strategic goals. And that's one of the key value things that we offer our customer base as well, is the ability to look beyond the traditional terminal and look towards collaborations, whether it's offshore, whether it's industrial and other sectors. As well as the other the diversified collaborations, we have signed agreements with port authorities and partners around the world. Most recently, contracts with the Red Sea Ports Authority for a major ports project along the Egypt's coastline, and also with SEG, one of the largest oil and gas companies in Uzbekistan, to open a new logistics and freight business in the Central Asian nation. And if I go back to one of my earlier comments, that's a part of our portfolio. You know, break bulk, project cargo, oil and gas is also one of our core commodities and services that we offer besides container.
Ross, what are your thoughts on embarking on ambitious acquisitions at a time of upheaval in global logistics and supply chains?
One, I think is vital, particularly for a company like ours. And two, I think it helps us service our customers and our markets much, much better. Firstly, I think our industry has always had a history of investing counter-cyclically to the economy. And you would look forward, particularly sort of after the post-COVID bounce, certainly 2023 and 2024 had both economic challenges and supply chain challenges that continue. That have been present for some time. I think that changes the market and it changes customer expectation in the market and how they procure, where they process, how they move their goods, and the expectations of how goods move through the supply chain. I think, you know, a lot of companies are going away from the pre-COVID just-in-time delivery to a supply chain that's built on a much more robust basis, which has options in it. So if you want to slow your goods down, if you want to change destination, you know, no longer you want to deliver to point A, but you want to change that to point B, can your supply chains handle that, right? And can they adapt very quickly and can change in transit at low cost? Now, in order to do that, you need to engage with companies like ourselves that have the breadth of services and the network of geographic coverage in order to be able to do that. So whether it's by sea, whether it's by air, we have those services to provide our customers. And I think as the customers expand around the world that are familiar to you and are important customers to you, they look to companies like ours to support them in their growth. to be familiar with them in their supply chains in new markets, and we provide that. So I think, look, I think the answer comes down to, I think that in these times there's value in the market, and certainly you can find good assets in key locations that deliver upon your strategy. And I think that to expand in these times is a necessity in order to continue to provide services to the markets and the customers that you serve. And I think that that's what we've done over the last 18 months and will continue to do. We still have, gaps in our service offering and our product offering that we'd like to close. But providing, more network coverage, supply chain density, options to supply in certain markets. This is key to us expanding our customer base and expanding with our current customers. And therefore, I think it's a necessity for companies to grow and expand in challenging times. Right?
Could you, just to flesh out some of the specific acquisitions that Julian mentioned, could you expand on the business case and strategic thinking behind one or two of those?
Sure. Which one would you like? I'll take. Let me start with
your choice.
Let me start with the two biggest, I guess. Yeah.
Great.
I'll start with the two biggest. So, I think that we've just closed with Noatum, which gives us a global footprint in logistics. It gives us market leadership in the Mediterranean in terms of automotive logistics. Today, in fact, we just announced a new deal to acquire a Finnish vehicle logistics company called Sese, which is based in Europe and moves finished vehicle on road and rail. It's a very good acquisition for Noatum. It improves their service offering. It expands their portfolio of services that they offer to the market. So the rationale for us was that we were looking for a company that gave us that global footprint, particularly in logistics, was synergistic with our business, was a platform that we could continue to grow, that wasn't a finished article, that needed bolt-on acquisitions like we've just done with Sese to grow, but had a very strong management team and a very solid customer base, a very sticky customer base. And so the strategic rationale was this was a missing piece in our portfolio, and particularly that we saw that we could bring current customers to their service offerings to add value to Noatum, but also Noatum could offer a number of services to our current customer base on a global scale. So these were the drivers for our business, and I think that it comes back to we have to pair, in Abu Dhabi Ports Group, we're an asset business in terms of our ports, and we're an asset-light business in terms of our logistics. But when you really draw out supply chains, around about 65% of all the value of supply chains is spent between the freight forwarder, the shipping line, or the air freight carrier. That's the largest part of any supply chain spend. But it's also the area of the supply chain that routes cargo. So the freight forwarder is often the one that will route the cargo and choose specifically where it goes, as does the shipping side. And that's why we stepped into GFS, which is a huge short sea shipper in our core market. And what that means is we can start to provide a network and a density of supply chains between assets that we own. And we can start routing cargo through our assets and be very accretive through our group. So not only can we service the market and give them different options in terms of their supply chain, not only can we give them a one-stop shop where we offer a complete supply chain solution to key markets and key customers, we can also be very value-adding throughout our group. And these were the compelling reasons why we wanted to step into both Noatum and to GFS.
Julian, to come back to the issue of geopolitical conflicts, how can ports maintain neutrality when experiencing events that may adversely affect their operations? What are your thoughts there?
Thank you very much. Obviously, I've been in the port industry for a number of years now, and I've seen it myself in different positions. But the potential for global geopolitics, to continue to disrupt the maritime trade is actually on the rise as national ambitions spread towards trade protectionism. Ultimately, and hopefully, all ports should adhere to a strict international laws, basically, and treaties governing their operations. And that boils down to transparent operational procedures and decision-making processes that help build trust amongst all parties. We must not forget, as a gateway to the economies, I mean ports in general across the globe, it's our duty to ensure that customers have the trade have the freedom of choice and ultimately delivering the best value that we can offer to that customer, no matter what country or geopolitical situation we are facing. Ports should prioritize most certainly security to protect their operations. And obviously key to that, and that's something that obviously we pride ourselves in 80 Ports Group, is developing a contingency plan to also respond to disruptions as and when they occur.
So when these events lead to customs and regulatory changes, what can be done to mitigate the effects that they might have on port efficiency and competitiveness?
Well, obviously, the traditional one that always happens, new customs and regulatory requirements can often lead to the unfortunate increase with, paperwork. We're all working towards these single point, port community systems to eradicate that out from our industry. Which obviously create an additional burden on administrative processes. But trade disputes or political tensions can also lead to increased inspection, delays in customs clearance, port blockades, even, port congestion. So I suppose complying with the regulations may actually take time for ports to invest in additional infrastructure. And we also have to consider the healthiness of those particular economies and ports. So often they are the ones that actually, don't actually follow the correct kind of regulations. But ports can actually reduce their exposure by diversifying their customer base and trade routes. This minimizes the risk of a single region and or market. But mitigation also means to invest in advanced technologies such as automated customs clearance systems, blockchain, AI for smoother and more efficient cargo handling. One such example I'd like to highlight, we recently acquired a company called T-Tech, who specialize in the use of AI and developing border control solutions and integration of customs systems. That also goes back to the strategy of our digital cluster, and ensure that we break down these traditional borders and obstacles that obviously hit us from time to time. In summary, I'd like to say that we need to ensure that we're at the forefront, we collaborate with governments and regulatory authorities, because it's obviously essential to establish clear, consistent, business-friendly customs and trade regulations, and that effectively encourages future growth.
I'd like to talk to you both a little bit about the overall topic of trade agreements and new markets and get your thoughts. Ross, let's start with you on the new India, Middle East, Europe economic corridor that was announced from the G20 and agreements of this type. So Ross first, and then I'd like to turn it back to Julian.
Yeah, I think firstly, I think it's a very exciting new development and a new agreement. I think India and the UAE are fantastic trade partners. I think outside of oil, non-oil, I think they're number one and number two trade partners for each other. So there's already established a lot of trade. I think the infrastructure development from emerging markets, particularly emerging markets like India and particularly the Middle East, which is industrializing at a significant rate. I think the infrastructure project that sits behind that is incredibly interesting. A sort of pan country rail network that connects through various different areas and all the way through to Europe and through the Med. I think that opens up a huge new trading agenda for those nations. And not if you look at the sort of headline, it's India into Europe. But if you break it down in segments, it's actually providing a huge amount of infrastructure for trade between the stops along the way between nations that are along those ways. So, for example, the UAE and its trading partners in the GCC region, for India and the CIS economies, the CIS economies into the Med, Turkey into this region. It provides a huge amount of import-export opportunities that are maybe missing today in this region. That certainly are there in more established, mature markets such as Europe and North America, but haven't been there in such a scale and involving so many countries in this region, in this corridor. So I do think it opens up. What we do see is, and particularly in this area of the world, when the UAE has done free trade agreements with trading partners, and then recently it signed agreements with Israel, with Turkey, with Egypt, with India. What we've seen is a significant increase in trade between the two. And so naturally for me, what you will see is an increase in trade. You'll see an increase in intra-regional trade. And then obviously you have the longer trade, which is the headline India into Europe and Europe into India by rail. Now, does it really compete with existing forms of transport? The answer to that is no, it's complementary, right? So there's a lot of truck movements in this region. There's a lot of sea movements in this region. But if you look at the growth in trade that it produces, the next modality of rail is a significant, it's certainly a significant beneficiary to or complementary service to the region, and you need trimodal movements within here. I think then the regulatory side, free trade agreements, reducing the red tape, just makes it easier for certainly businesses to do business in different regions. And that's where you really see the volumes that they follow these agreements, and they really do ramp up. Then lastly, your countries have to have the infrastructure in place. So that's where private companies and government-owned entities in the port sector and the logistics sector, in the rail sector, they all have to be ready, and they all have to invest in their business in order to absorb this new mode of transport, but also the increase in volumes. And lastly, I think all these nations have to invest in the digital side of the trade. You have to have the visibility in the supply chain. You have to have the connectivity of customs systems. You have to have the federal transport systems being able to be transparent and give data and certainly facilitate things like blockchain in the future and automated payments through the system. So everything needs to be in place. But for me, it's a very encouraging agreement and certainly leads to a huge amount of opportunity in the region.
Thank you. Julian, what are your thoughts?
Well, obviously, I think Ross actually covered quite a bit of the actual sentiments with everybody within the 80 ports group. But let's also look at historically, talking specifically about the UAE and India. We have a long history of trade and more importantly, healthy trade between India for many decades. And if you just look at it from a year-on-year growth perspective, we've grown 23% basically in 2022, reaching an impressive $84 billion. And that's also obviously forecasted to increase significantly in 2023, the trend obviously going upwards. But all in all, it's expected that the corridor would increase efficiency, obvious, reduce costs, enhance economic unity, generate jobs. Everything also, and Rosh mentioned towards the rail connectivity, and also reduce greenhouse gas emissions through taking trucks off the road, obviously, as part of the first and the last mile. But ultimately, I basically share Ross's comments that he's
Ross touched on intra and inter-regional trade. How do you see global, again, zooming out a bit here, how do you see global trade and logistics companies being leaders in that area?
Well, it's quite simple, collaborating with governments, regional trade, logistics companies within those economies is paramount. It all leads to streamlining trade procedures, ensuring we reduce tariffs, we harmonize standards. Obviously, that knocks on to fostering smoother cross-border transaction. It's critical that we ensure compliance with regional and international customs regulations simultaneously, and simplifying the cross-border trade. Trade facilitation is important to move up the value chain. Capacity building is also needed to take advantage of these new market openings. Abu Dhabi successfully managed to become a key global hub for trade through good regulations, transparency, better infrastructure, and improved security. Facilitating intra and inter-regional trade.
I want to come back to the taking trucks off the road and the larger topic of sustainability. Before I do, just a reminder to the audience, we will have time for questions at the end. If we don't, those questions will be replied to by email, so don't hesitate to submit a question. Just open up the Q&A tab and drop us a question right now so we can have that all queued up for the end. So back to the discussion. Let's talk about how the conversation around sustainability as a factor in port development strategy. So Ross, I want to turn this to you. The calls for decarbonization are growing stronger. How far do you think that will take us? What's next?
I think it's something that the sector is looking at extremely intently. And I think that we're at the naissance of what the industry can do in the future to reduce its carbon footprint and to have more of an impact on that in the supply chain. I think if you look what is happening in terms of ports around the world, I think it forms a part of most companies' investment cases now. So when they're looking to build ports or expand ports, when they're talking and engaging with shipping lines, both in the container sector and non-container sector, the type of fuel that these ships will use, is cold ironing available in the port? All of these things become questions, and there's a huge amount of engagement. And when you're bringing your investment cases forward, particularly to the financial community, there is a lot of questions about the subject and about how you're catering for the subject. As a listed company ourselves, it's important to our investors, it's important to the government in the UAE, and it's important to us as a management team in the company. So it takes quite a lot of discussion time within each of our business cases and our investment cases. I think there's more to do. As I said, I think we're at the naissance of that as an industry. I think we've made huge strides in the last 3 to 4 years, significant strides as an industry. I think that would accelerate, and you'll see a huge amount of innovation and technology and new design of ships and new fuels coming into the industry, and that will only accelerate what we're doing as a collective. So it's important. It remains important, and I think that as an industry we're doing much better.
Is it still appropriate to talk about? Let me rephrase this. Really, where I'm going is the question of prioritizing economic interests over environmental concerns when you are planning strategic planning for your port operation growth. I'm just curious on your thoughts of whether we are still facing a question of prioritizing economic interests over the environmental concerns, or if from your perspective, the overlap has shifted enough to sort of make that question not really as pertinent anymore. Is the difference not as insignificant, or is it still?
I think it's still a balance. As I said, it takes up a lot of thinking within our business and in our investment cases. But I don't know many executives that were rewarded on meeting their ESG targets over and above meeting their economic targets. So there's still work to be done in that respect. But I would say that if there's any executive team in the sector that don't have this on their agenda, I would be very surprised. And I think that also comes from, the market, and more companies that we deal with are demanding greener supply chain solutions, are demanding partners and supply chain partners that are committed to lowering emissions, and have good ideas about how to do that in a cost-effective way. A lot of the time, the sort of initiatives that come up do come hand in hand with cost saving. So the green initiatives that come up also produce a lot of cost saving themselves. So the economic question almost answers itself in that respect. But we are all companies, and we do have to drive for profits and economic gain. And still there is a balance there to be had. So I think we've come a long way, as I said in the previous question. Do I think we have it completely right as an industry right now? I think that we are on the way, and a huge amount is being invested and done. I do think it's on the agenda of all top teams around the world, and I do think that what you'll see in our industry and the innovation that will come in this sector in the next 18 months, 18 months to 2 years is very, very significant. So yeah, I hope I answered your question, but I think the balance is there, maybe not where it needs to be right now, but it will be there.
Julian, I'd like to get your thoughts on this topic too.
Thank you very much. And just to further from what Ross has always said, if you look, it's a resounding yes. And are we factoring into the environment, sustainability, into everything we do as a ports group? Absolutely yes. And it's across several sectors. So it's not just about what we're doing to meet the future obligations, but in the design of infrastructure, we've certainly taken that into consideration now. We have several ongoing projects. We've already designed the first net zero building in our industry in the region. It's also going to be built to net zero, and it's already winning several awards, and it's going to be based here in Khalifa Port. And if I just look at the lifetime of that actual building, it basically, in 1 year, it's basically the equivalent of running electricity on just close to 4,000 homes, and they'll save over 30,000 metric tons basically of CO2. Aside from that, we have several other initiatives that once again are factored into whenever we build an infrastructure. It involves on smaller facilities, whether it's laying eco mattresses and seawalls, whether it's the coral relocation monitoring program we currently have in place. And we're also involved in a mammal migration study. And if I just look just next door to here in Khalifa Port, one of the key factors in consideration in developing this terminal was the effect on the marine life. Hence the reason why we spent a couple of $100 million basically on the breakwater. So I'd say it's absolutely paramount and part of our DNA in whatever we design as far as infrastructure and build going forward.
Ross, how can ports balance, and this can be for both of you, balance their economic interests with the need to address social and cultural implications of their activities, especially in diverse and sensitive regions?
Well, I don't think they're opposed objectives. I think that they're naturally objectives that go hand in hand with each other. I think that particularly for our sector, ports are quite emotive in their communities, right? So if you go into a region and you own and operate and build a port, typically the workforce and the labor force is from the local region, right? So you typically have a lot of social dependency on the port, but also it generates so much additional GDP into the region, right? And so I think that you have to adapt, but by adapting, you're getting all the benefits of that region. And I think that that's why they're not mutually exclusive. And I think that all ports particularly have a social responsibility. They are custodians of the sea. They're custodians of the interface between the marine and the land side. They're custodians of their locality, their geographic reach, and they're custodians of a lot of social and employment within in the region. And you need to harness that. So when we have operations in Egypt, those are, we deal with that very differently than we would deal with our operations in Halifa Port here in the UAE. So you have to be culturally sensitive. You have to be socially sensitive, but integration is the key. And I think that one benefits the economic interest. If you get that right, your economic interest will grow, right? Naturally they will grow. If you get it wrong, your economic interests are very, very difficult to achieve. So I think engagement is the key. Engagement with stakeholders, engagement with local government, engagement with national government, engagement with the labor force, engagement with the locality, really be custodians of the sea, look after the marine wildlife, look after the natural reefs around, and this is our responsibility to do, and that's what we pride ourselves on.
This, not to put you on the spot, but any particular strategies that AD Ports Group has put in place to address this topic? Any that you want to speak about?
Yeah, we always have market entry strategies and geographic entry strategies. We see ourselves as a very good partner. A lot of our investments, they're not taken alone. They have local partnerships within them, whether that be the government itself or a local family that we've acquired a business of. And therefore, I think our strategy differs depending on which area of the world that we're operating in. But we try to be very sympathetic to the local needs and the local culture. But what we try to do as a company is enrich grow the trade for the benefit of the locality. And not just the benefit of the company, because if we're benefiting local businesses, we're benefiting local stakeholders, we're benefiting the trade, naturally we get rewarded by that. And so it's always a case that working with your locations and working for them and enriching them and empowering them through economic development, asset development, more trade networks with other countries. This is a beneficial thing for all of us, and that's where you really derive your growth from.
So, sorry, I was just checking the audience questions, seeing if there was anything that I wanted to bring in. I do want to leave time for those questions because it looks like we have some good ones. But before we turn to that portion of our segment, I want to get some closing thoughts. So, Julian, what advice would you give to smaller or emerging ports looking to establish themselves in the midst of evolving geopolitics?
Thank you very much indeed. May I just expand a little bit on Ross's last comment?
Yeah, please do.
Obviously, and the sensitivity is obviously essential when you're looking at new facilities, new concessions, new ports globally, wherever that may be. But I'd like to think that the UAE in itself is a mixing pot of multicultural nationalities. And I think in itself, that evolution of the UAE is actually given those essential tools basically to adapt to just about any environment, and whenever you look towards a new concession, whatever the country may be, ultimately, once you start ensuring that there's food on the table quicker and more efficiently and lower cost, once you start ensuring that goods are available in their local economy, and once again, I go back to what I said earlier, we are a facilitator of trade. We're a gateway to the economy. And once you can demonstrate that you're able to basically, hold true on those promises, ultimately, then the local economies also embrace the new operator and or company servicing their facility. So going back to the last question, what advice would I give to smaller emerging ports? Well, ultimately, ports must be prepared to adapt to the changing circumstances, invest in resilient infrastructure and diversify. If you look at COVID as a prime example to the challenges that we actually faced during better part of 2020, 2021, you saw a shift in the industry where Obviously, container premiums were at an incredible high across the entire region and globally as well. And you saw the movement and change from actual container to general cargo. And that was absolutely essential in delivering goods to the local economy. And when I say diversifying, and I'll go back to what I mentioned earlier, is if you look at the services that we offer, it's across all segments. And so if you can diversify across the entire segment, I think ultimately that will foster robust relationships, not only with international stakeholders, but also the local economies within those ports. We shouldn't forget that, you know, with smaller ports and also in the midst of evolving global geopolitics, it's essential that they prioritize safety and security in their operations. You know, in a world where geopolitical risks are inevitable, collaboration, strategic planning are obviously key to navigating these challenges.
Looking ahead, how do you see the port sector landscape evolving? Ross, I'd like to start with you and then hear Julian's thoughts as well.
Well, firstly, I think it remains pivotal to the world economy and to most governments. And so it's a high-profile sector. It needs a lot of continued investment. It's a high capex. Sector. And it continually needs to grow. We still have a lot of developing economies that need to upgrade their port facilities. We need new port facilities to be built, and we need to continually invest in our existing facilities. So what I would say is that you'll see a shift in the port sector to much more automation in the future. Where it makes sense. It doesn't make sense in every location and every port. But the economies that you're seeing, the cost economies and the carbon footprint economies you're seeing in sort of automation is a very compelling argument now. But I also feel like you will see port companies, replicating a model that's being implemented by the likes of ourselves, where they are not just port companies, they step much further down the supply chain. So they invest in logistics and they invest in shipping to cater for a lot more of the supply chain rather than simply the port handling and that's where they begin and end. So I think adaptation, that there'll be a lot more involved is integrated companies in the supply chain. I think they'll become a lot more technological advanced, and I think there's a lot more investment and that will go into the sector over the coming years.
What do you think, Julian? What are you predicting?
Thank you. To expand on that, obviously, when you look towards those next 5 years and what they'll do differently or what they'll enhance, so naturally, ports will obviously look towards how they can deliver a better value proposition when in the competing markets, whether it's improving, you know, not whether it's essential to improve productivity, the efficiencies, because ultimately that reduces the cost of trade. That's obviously essential. But you know, as shipping becomes more cyber dependent, the security of those systems becomes an even greater importance. So the challenge now becomes not just how do you protect your physical ports protection from security risk, but also the defenses against cyber attacks. And that goes hand in hand with the way that most ports are actually developing into digitalization. So I think that's one of the considerations as ports need to factor in the next 5 years.
How will AD Ports Group be different than what we see today?
Well, the AD Ports Group today, if you just look at the last 2 years as an example, we started to spread our wings internationally. So we've taken the foundation of what we've created here locally in the UAE, and now we're taking that expertise and expanding on the global stage. And Ross has discussed many of those initiatives, the recent acquisition of Noatum, Transmar, and most recently the expansion of that RORA agreement. So that's where we'll be looking specifically. diversified portfolio across different regions, obviously. For obvious reasons, I can't actually discuss those here today.
Any closing remarks before we dive into questions?
Happy to take questions.
Yeah, great. All right, so let's just dive right in. How can ports effectively communicate and collaborate with shipping companies and other stakeholders to ensure coordinated response to uncertainty? I'm going to let you each, just jump in. Whoever jumps in first can take it.
Going back to the original statement I made about, how can I say, the culture that we live and breathe here within the UAE, I suppose the most important thing is communication across the shipping lines, the logistical providers. If you look to how it's changed, it's done a 180 degrees over the last 2 years. Obviously now we're not talking about these record high shipping rates. We're actually talking about record low shipping rates. So I think going forward, there needs to be a bigger role in what we play in discussing these as far as future expansion coming on with the shipping lines. But it's a never-ending communication that's essential to the success of both parties, because without either or, we both fail.
What new trade corridors and shipping routes is AD Ports targeting, and why?
Ross, that's yours.
That would be giving away our secrets, but yeah, look, I think this region is particularly important to us, and any region that has significant trade with the UAE is an important area for Abu Dhabi ports. So you can basically look on a map and tell where that is, but the GCC, Southeast Asia, Africa, these are all significant trading areas with the UAE and where we look to invest.
And just to expand on that, if you look at part of one of the clusters within the AD Ports group, you've got the KEZAD, the industrial cluster. Behind us here in Khalifa Port, we have over 550 square kilometers of industrial and free zone land that obviously for heavy industry, light industry and manufacturing, it's absolutely essential that we open up new corridors to facilitate the trade between those countries and what our customers and exporters demand and should receive.
This one might have been submitted before we got to some part of the presentation, but I'm going to throw it out because there may be some additional thoughts. What role does technology ports navigate geopolitical uncertainties?
Sorry, can you just repeat? You just broke up a little bit.
Oh, what role does technology play in helping ports navigate geopolitical uncertainties? And this may have been something that we sort of addressed. It may have come in earlier in the presentation.
I think it's significant. I think, I think the technological advancement of our sector has greatly accelerated from where we were maybe 5 years ago to where we are now. And I think that our sector, for sure, cannot live without investment in technology. And the level of technological change that's coming at this industry is beyond comprehension, right? I think, it's technically now, from a hardware point of view, from an asset point of view, to manufacture in China and deliver here to the UAE to your door without any human intervention whatsoever. What's not quite there is the documentation and the payment side, right? There are so many stakeholders, so many parties involved in the movement of goods that it's always the software side that needs to catch up, right? And the security side as well, so the collaboration. But I think that what you need in any supply chain is to give a supply chain robustness. The first thing you need is visibility, complete visibility and real-time visibility across the supply chain. If you don't have that, then it's impossible to reroute goods. It's impossible to build robust supply chain solutions. And therefore, when you have geopolitical influence, or you have operational needs in order to to change your supply chain very quickly, you cannot do that without the basis of having a technological solution in place to provide the visibility. So for me, it's not a question of does it. It absolutely does. It's not a question of should it. It's past that point. That if you're a company in our sector today that's not significantly investing in its technological side, both on the data side and on the operational side, you are falling behind. It is that important. It's a critical part of all solutions that we have.
In the context of emerging markets, how can ports leverage geopolitical shifts to attract new trade opportunities and investments?
Yeah, that's a great question. It goes back to what I was explaining earlier, that actually it throws up a lot of opportunity. Trade and the flow of goods is like water. It always finds a way. What we have to do as an industry is position ourselves to how do we affect those changes quickly. And it kind of links to the previous question, I think the previous question but one, where you're talking about engagement with the shipping lines and the port. But it's wider than that. It's engagement across all of the stakeholders in this. So the private sector and the public sector have to work together to be able to facilitate the changes in trade that you find. And so you will always find new markets. So consumers and governments will always source from new markets if certain markets are close to them. You will find product, for example, will route in a different method. And our job as an industry is to where do we apply our investments in order to facilitate that happening. So can we divert ships? You know, as a ports company, what services can you provide? Can you do processing closer to home? So if you have facilities available adjacent to berths where you can do more food processing rather than importing the finished food. So all of these things can happen, but I think you have to be bold enough and to invest. You have to be confident in your strategy, and you have to work with all the stakeholders that are within the supply chain to affect that change. And so for me, looking at the instability in the world, you should see the opportunity and not the challenges. Deal with the challenges, benefit from the opportunities, and that's how we position our business, and that's what we've done successfully as a whole sector over many years.
Julian, I noticed that your screen froze for a moment there. So any comments on that one, or any closing comments?
I'm sorry, it actually froze and the sound went for a little while. I'm sorry.
No. Just wanted to give you an opportunity to chime in on any of those points before we close.
No, and as Ross said, you know, an obstacle, a barrier becomes an opportunity effectively to, how can I say, expand on that, basically enter new markets, effectively provide solutions to the trade and the actual economies that we actually servicing. So effectively, you know, that's the strategy within the group. I'd like to think that, and going back once again to what I said earlier, our ability to adapt to the various different, how can I say, cultural ethnicities, basically in backgrounds from this within the UAE, is enabling us to actually expand successfully into these new markets. And I think I've frozen once again. Now I can see it's all blocked. Sorry.
Well, unfortunately, we are out of time. So I just want to tell our audience, any unanswered questions will be followed up by email. Thank you so much for joining us today. The webcast will be available on demand between 24 to 48 hours, and you'll receive an email reminder about that, as well as a link to download the upcoming white paper on this topic when we release it in the next few weeks. For more information related to today's webcast, including where you can leave us your evaluation, please visit the resources link. Thank you again for attending Navigating Geopolitical Shifts, Strategies for Ports in an Uncertain World, presented by the Journal of Commerce, by S&P Global, and sponsored and partnered by AD Ports. Please visit joc.com under the resources link. You'll find our webcasts under multimedia, and you'll see a link to register for the part 2 of this series. Again, thank you to AD Ports and our wonderful speakers for partnering and working with us on this webcast and a great discussion. Thanks everyone, and have a great day.
Thank you.
Thank you.